Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over market conditions and ratios for our commodities bull market. Take a look at it, see what they're doing, and we'll dive in here. I'll give you my financial opinion and all that. So let's just dive in and take a quick look and see what they're doing. We got the 10-year yield. It's pulling on back. Look at the dailies here, pulling on back. We got a nice little hammer candlestick here on yields, which mean we could bounce a little bit higher. Again, it doesn't mean that the bounce will be anything meaningful. This was a bounce here on a hammer candlestick off support. We've kind of pulled on back below it. But usually we get a bounce with a hammer candlestick where yields could go up a little bit over the next couple of days or week. The dollar continues to move sideways, sitting on top of its pattern. It's sitting on top of this white support line right here, which is the tops of these other two ones. And we're sitting on top of it, which means that the dollar has been getting stronger. And it's something where, there's people speculating on this continuing to go higher. There's people speculating on this turning and going lower. I don't really know which way this thing's going to necessarily go. I don't think anyone does know. But it's sitting right there right now at this time. And I think eventually at some point, the dollar will get weaker as the dollar gets deployed into other assets. I think people are selling bonds and stocks, converting to dollars, and then they're going to transfer into something else at some point. And we'll find out what that is. Commodities themselves, we've had this kind of large sell-off month. So we've got some selling pressure recently. Here it is, selling on off. And this could be kind of between wave one and a wave three move. The first wave is this guy right here. We've got three waves in it. Wave one, wave three, and then maybe wave five. But I think this is one big wave. We get a little bit of a pullback, and then we head on up again in a third wave. So that's where we're at this time. We're still pulling back between the first wave and the next wave that's coming. And the size of this wave will be debatable. A lot of the times it pulls back, 60% or something like that, which is a pretty big pullback. If it were to pull back 60% or so, you're talking about a move that goes all the way down to 190 from 290. So that's a big move if it were to pull back that amount. So we could have further downside. Another thing is we might not. We may strengthen up in some areas and then start to move higher again. We've got a problem in the energy sector where we continue to release strategic petroleum reserves. We continue to draw down our inventories. And when that stops, that's like October of 2022 or so, we could see another big surge in oil prices. And I know they're heavily correlated to the CRB index. Oil is heavily weighted. Coming on down, looking at some of the other, here's crude oil. Crude oil continues to be very resilient around the $100 plus range. And we'll see if that can continue. Natural gas has been pulling on back. Again, we'll see where this thing bottoms out at. We still have a lot of momentum heading down in natural gas, just kind of looking at some of these commodities. Uranium futures pricing has basically moved sideways. Looks like we're trying to consolidate here to some degree. We have the CRB to S&P 500 going on the dailies. We've got that pullback as well. It's starting to try to consolidate in the region that it's at right now. Again, big picture view though, we've got the breakout to the upside. We might have a little bit of a pullback or sideways motion, consolidation motion before heading higher. The platinum to gold ratio is very low. It's at about 0.5. We're still above the downtrend line. And I think at some point, I'm looking for platinum to outperform gold. But in the short term, gold may outperform platinum in a market that is scared. That the participants are fearful, they're scared, and they have less inflation expectations. So I think in the short term, we could see a pullback in platinum, which would be, I think, a good buying opportunity for myself. But gold could outperform platinum. Platinum palladium ratio, it's basically moving sideways, chopping sideways. We've broken out of this downtrend. It's been moving sideways there. Platinum to silver. Platinum's been outperforming silver. It's been moving on up. It's breaking out of this pattern. So that's a good thing for platinum. And then we've got the gold to silver ratio. Gold is continuing to move at a better pace than silver. It's outperforming. That is an indication of fear in the market, fear of recession, fear of collapse, fear of all those things. And sometimes they don't materialize, sometimes they do. But right now, gold is preferable over all the other metals at this time. Palladium to silver, palladium's outperforming silver in the short term. There it is coming on up. Silver has really had a rough time frame. Dow Jones to gold average. Dow Jones has been outperforming gold in the very short period of, very short period, short time frame. So we've got Dow Jones outperforming gold. We've got the gold to oil ratio that's been moving sideways at about 16, 17 at this time. That is historically a normal ratio. It was incredibly cheap back in 2020, and now we're compressing down, eating up some of that valuation against gold. Oil is. So oil has been outperforming over the past couple of years. The copper to gold ratio has been falling. People are fearful of a recession, and this is what you would see. Falling yields, 10-year yields, and falling copper to gold means that we are getting some fear in this market, and that this sell-off is indicating that we could be going into a recession and a pullback in stocks and all these other things. So it is possible here that we could see a pullback in the short term in the overall commodities complex and in the overall markets. And that recession is could be likely. And it's showing us that copper is underperforming gold. And gold is outperforming all the other precious metals, where we could be coming into a rougher period. But keep in mind that the markets are forward-looking, and that this could be pricing in that move already, and that we don't have too much downside left before a potential turn. Highly depends on what's to come. We've got uranium to silver ratio. Uranium starting to take off to the upside. That looks good for uranium. Uranium to S&P 500. It's remaining quite resilient above its breakout line here. We've got uranium to gold ratio. That has been doing okay for uranium. It's just been moving sideways. We've got uranium to crude oil. I'd like to see a break to the upside where uranium just goes ballistic. That would be awesome for uranium. And then uranium to copper, where uranium's been outperforming copper here recently to the upside. So uranium's actually doing quite well against a lot of the other things that we measured against. Baltic Dry Index to gold. We've been going sideways in this ratio. We're trying to break out. Looked like we were getting a breakout, but it came back below the resistance line. Coming on down, we've got lithium. Lithium has been moving sideways for lithium. We've got the S&P 500 that's been selling off. We have some bullishness the past trading session. We got to see if the buyers continue to come in here and buy it up or not. And the NASDAQ, same thing, bullish hammer candlestick. Looks like it wants to break higher, but we got to break this downtrend line to get back into an uptrend. Looking at XHB, which is the homebuilders ETF, looks like we're getting some buying pressure here recently over the past couple days. So that's looking a little bit better than the rest. It looks like the lower interest rates and the higher homebuilders ETF are kind of, somewhat correlated. We're starting to see lumber come back as well. Lumber is getting a little bit stronger. We were up 5% last trading session. We were up another 5-6% before. So that's starting to basically firm up, start to move to the upside. Looks like we're hitting a nice, good support zone for lumber as well, where we could potentially head higher. Nickel has been moving sideways. It's kind of in this consolidation pattern to the sideways move. Palladium, priced in dollars, has been moving sideways. We've seen some weakness in in cocoa futures. They're getting a little bit of a sell-off, breaking their support line, but they're starting to kind of roll over. Wheat's had some pressure where it's sold off back down. It is still in sell-off mode. This also impacts our CRB index. We've got soybeans that have been selling off. That looks like it wants to continue to sell off to the downside. We've got corn gapping lower and heading lower with some selling pressure as well. So the agricultural commodities have done quite weak. And copper also heading lower, getting some selling pressure as well. So that the recessionary fears are definitely taking a stronghold on commodities and kind of pulling them lower. The PPI by all commodities has rocketed higher, and this only is till May, but this could roll over and head back down a little bit as we're starting to see some of the commodities pull on back. We've got housing starts, that's pulled on back down to 1.5 million. Again, we need to watch this. If we start coming below this average, we continue to head lower, we could see some pressure in the markets, especially commodities, from a liquidity drying up, less loans in the system. But we got to continue to watch that. That is one of our leading indicators. And then the inflation rate, 8.6, that was the last in May. And we're right on that trend line for the inflation rate year over year. Coming on down, we've got aluminum. Aluminum has been under pressure as well. Recessionary fears do not bode well for aluminum. But that's where we're at right now, coming back almost to the full breakout. And we're seeing some selling pressure there as well. So overall, we're starting to see some selling pressure in commodities, and recessionary fears basically coming out and attacking a lot of commodities. I do think that energy is a driver of the increase in interest rates. And the increase in interest rates have gone up fast enough where it's starting to have selling pressures on commodities. It's putting pressure over there. So I'm still holding. I'm waiting to see what the housing numbers put up. And I still think that the inflationary forces of energy are still in the system and that they have not been corrected. So I'm sticking long in commodities until I see those pressures be released. All right, guys, that's all I've got for today. Give me a thumbs up for the content. Subscribe to the channel. Subscribe to the website, Platinum Membership, in the description link below. If you want to know how I'm playing this and what companies I'm buying. And that's all I've got for today. So we'll catch you later. This is Finding Value.